Is this working? Yes. If anyone is here, I cannot see yet, so bear with me. Need some water. Oh my god, it's 2 a.m. Hello. All right. Who do we have here? Let me post the link so people can see it. Is this live on Twitter, X? Yes, it is. Wow, 50 views on X. So hello everybody that's there. I need to get my iPad so I can see. Hold on. Right, iPad. Turn on. Where's the fucking... There it is. Put that on here. iPad's run out of battery. That is helpful. All right, I will just look on here. I'm on one screen. Owl is here. Ed, Balboa, Lucifer, Wahahawax, Mitko, and AZTV. Unlock iPad. And let me do this. So I apologize. It's 2 a.m. I do not know how the internet is going to hold up here. I am connected to the internet, so that is good. Let me just go over here. What was the... I assume we're just flat on FOMC. So the more important thing that we want to be looking at is the... oh, there we go. The questions and stuff. The conference afterwards from Powell. Volume down on my iPad. Okay. Yeah, so FOMC came in, yeah, as expected. We took out some lows. What did NQ do? Hey, we got a nice little range already forming here. How's everyone doing? It's been a while since I've done a stream. But I thought I would jump on today. I did promise the crew that I would jump on for a little bit. We had a pretty good session earlier. We had a good New York trading room where we got 7 wins in a row. So we traded this earlier. Live. Scalpies through the New York Open. So this was the first like half an hour of the initial balance during the New York Open earlier on. I haven't actually looked at the chart since then. So this was previous day close. Price has just been hovering around that previous day close. And now we're getting a bit of a dump. So taking out some equal lows here. Okay. This is pretty much what we expected to happen. So when I was... Yeah, when we were discussing this earlier, we were expecting price to come up here, single prints, imbalance, at least to bounce up to this point. And then we were looking to fill the gap from yesterday. So that has happened. Bitcoin's doing okay here, chilling. Ethereum's chilling. ETH BTC chilling. Altcoins chilling. Not a whole lot going on right now. Layer. Why was I looking at layer? Oh, because I had a big old dumpy. Right. Peace puffs. Yo, I'm in the group since the discount. Hardly been there, but like the idea of your indices blueprint as currently only trade BTC. Yeah, well, this is the thing. So I've been mainly just scalp trading on the NQ recently, and it's like, it's really easy. It's just like, just in and out, 1 to 4 minute, quick scalps. And we can cover some of that. I don't know if this will happen during FOMC. But essentially the idea is you just look to trade a range because the market's ranging all the time, much more often than it is trending. And yeah, you just look to just scalp a range. And that's what we've been doing to really, really good effect lately is just identify a range. So whenever you've got the New York Open, so this was New York Open earlier on. We just formed this range early. And we just look to long range lows, short range highs, basically take profit at the midpoint. And we got 7 trades in a row. Every single one of them hit. Earlier on, we did the same thing, like just day in, day out. And it's really, really, really straightforward. And we're probably waiting for another similar situation to happen here. If price can start to stabilize, and this just becomes a good little scalping range that we can start to trade. I'm going to start doing a lot more of this on live and sharing these ideas. At the moment, it's a little bit difficult because I'm traveling, because I'm often trading just on an iPad. Not able to stream so much because of dodgy internet connections and so on. But yeah, cool. Why do you use bar candles? I use bar candles on indices when I'm scalping, when it's like the 30-second or the 1 minute time frame, just because it's cleaner for me. So when I look at the higher time frames, I like to use the actual candles. But when I'm just scalping on low time frames, it's just visual. Visually, I find it easier to see where there are gaps and where there's stuff here where it's like it's just less information. Like it's less stuff filling up my screen. Like, for example, when you're looking like, okay, here there's a bit of a gap, right? But when you just turn on the bars, it just becomes really clean. I don't really know what it is. It's just like something that I prefer when I'm just trading the lower time frames. I just switch it to the bars and it's just clearer for me. I still use full-bodied candles when I'm looking at other stuff, but yeah, it's a visual thing. It just makes things cleaner. What R to R are you going on the scalps? So they're quite often, the average that I get is only like a 1.1. So that's the stats. Now it's gone a little bit higher than that. And when you catch a runner, it's very different because I only do statistics from the ideal scenario. So very often what we're getting from these kind of scalps is a 1.1 from entry. Now that's assuming that I'm not going to get the perfect entry. It should be a 1.5, but often it's a 1.1. But where you get like a 70% win rate on this, so, and you can take 20, 40, 60 trades per day using this kind of strategy. So it all plays out very, very nicely eventually. I feel like this is a really random start to a stream because I've got no context here. I just jumped on because I had an alarm going off and I was like, okay, I promised people that I'd go live for FOMC. I'm very, very tired. And I have had, I haven't even had a coffee. Maybe I'll have a coffee in a minute. 2:12 a.m. I hate this time zone for trading. It's very annoying. So what are people's thoughts in general? What do we think we're going to get during the press conference? Because that's going to be what's important here, is the press conference. Much more so than the data, because we all knew that things were going to be flat. Like, they weren't going to cut rates. But the press conference is going to be interesting. Fill gap below. That is certainly one scenario. I personally am really hoping that this gives us a little bit of a catalyst for a move higher. Just from what I've been seeing within this range, we have been holding higher lows consistently. We have had a sweep of internal liquidity. We are right now coming into a little bit of a gap, all right, locally. Now, the thing is, if this starts to drop, even if we drop below like 95K, I think this unravels very quickly and we get a move all the way down to like 82 to 84. I don't really see anything else here. I'm not looking for it just to take these lows and then to bounce. I think if we are going to push from here and we're going to be seeing new highs, then it's got to do so like right now. So we get this sweep now on the news because it's flat, blah, blah, blah. But if Powell comes out and the market reacts quite strongly to that, especially because the NQ's taken a little bit of a dump here, if we can get a recovery, then I'm not looking for anything lower than where things are like here, right? This should be the low, and I don't really want to be giving an opportunity for longs to be getting into this. Like, for myself personally, I've been scaling into some longs on Bitcoin, Ethereum, various altcoins. We've had a decent move up so far. I like how things are playing out here, but I will very quickly get out of those longs if this starts to, like, if we do start to drop here more significantly, then I'm looking to get out of that quickly and just maybe, okay, reconsolidate around about 82 to 84, see if it can put in a higher low, like a major higher low, and then we go for those highs again. It's kind of make or break here. We're just hovering around the point of control. There's not a whole lot that you need to be trading. It seems to me when I'm looking at the CVD and the open interest, we've got CVD down even since yesterday. So CVD right now is lower than it was when price was significantly lower, a few percent lower than it is now. So we do have those divergences playing out. We are looking okay here. The pump yesterday, that's been corrected. So let's see what happens when Powell comes on stage, when he starts answering questions. But if this can be a catalyst for a push higher, I think that would be really nice. A move back down to 84 to 82 just prolongs the boredom for me. Like, I think if we can push higher, then things start to get a little bit more interesting. We can start looking to trade more stuff. Volatility will increase, volume will increase. If we are to drop down, volume's still going to remain really low. Altcoins are still going to remain really shit. There's still not going to be a whole lot to trade, and we just have to like wait even longer. So let's see what happens. Let's see. But I like that the first move is down. That for me is a positive thing. Jacob, which country are you staying at? Last I remembered, you were in Indonesia or something like that. Yeah, so I started off in Indonesia. I'm currently in Malaysia. Yeah, I was in Vietnam a couple of weeks ago. I'm back in Malaysia because it's just like a nice place just to slow down a little bit. Whenever I need to do some work, here's quite a good place to do some work because it's fairly reliable internet. Not the best in the world, but fairly reliable. Nice and convenient. Just nice apartment. Good view of the city. Pool, gym, sauna, that kind of thing. Shops downstairs, restaurants, bars, all of that. So easy just to live a life without like getting the FOMO of having to travel around too much. So yeah, Malaysia at the moment, Kuala Lumpur, which has become my work base in Southeast Asia. But I think I'm going to be leaving Asia soon. Mainly, especially if the market starts heating up again, I'll be leaving Asia soon. I'm not sure if I'll go South America or whether I'll go Africa, like Tanzania. I like the idea of waking up and seeing giraffes and elephants and lions and cheetahs and ostrich and things like that outside my window. Zebras. Trading, and then there's a giraffe just chip, 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 walking along. That would be very, very cool. I'm just looking at the stream. My eyes. Oh my god, my eyes look so tired. I need to wake up. I need to have a coffee. All right, let's find the Powell talk on YouTube. I can bring that up. And maybe I just make myself a quick coffee. Cool. Right, I've got the stream, the Fed stream live ready to go, so I can post that when it's there. And okay. Peace Puff, South America is amazing vibes. Highly recommend. Yeah, I'm 100% going to South America soon. Right, let me put the kettle on. I'm going to grab a coffee. Squeaky. Owl, ETH looks good as yeah. Sorry if it's noisy in the background. I've just put the kettle on. So Ethereum's interesting. So we knew this was likely to happen, right? We've had this big old downtrend against Bitcoin for the longest time, since the last time it had its big upgrade. And we came down to the 2020 yearly open. So lowest Ethereum has been against Bitcoin for 5 years. Pretty crazy. Got a decent bounce from that, and for the first time, it's just stabilized somewhat. So it'll be interesting to see what happens here, because we've just been in this just relentless downtrend forever, and now we're just just going sideways, going sideways, going sideways, going sideways since hitting that 2020 yearly level. ETH USD also looking very interesting. So again, it's been down, 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 like big downtrend, parabolic. Okay, we started to increase like speed and velocity to the downside. Broke that. Now we haven't changed market structure, but once again, it's just calming down here, which is actually quite a positive thing. There's my water finished. Okay, let me put this in. Oh my god, the squeaky chair. Cheers to coffee at 2 a.m. Get that out of the way. I'll put some cold water in it. All right. Yeah, so it's interesting. I think it's a good place to be, like, maybe attempting to just position yourself into Ethereum, because I actually quite like it here. I quite like that it's just holding, and this, like I say, it is the first time that we have had an impulse up that's held. There has been no occasion since the end of last year, and in fact since like 2024, and again since we were like down here 2023, so like one time per year where you've had an impulse higher which has held. This is the very first time that it's happened. So down, 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 you get a break up, you break the downtrend, and then we're just holding. Every previous time we've had any kind of impulse, it has retraced and created a lower low. So we'll see. We will see what happens. Like I say, I believe that today could be a catalyst. I believe that it could be enough, depending on what happens and what Powell comes out with, and whether it is looking at like I don't know, some kind of dovish scenario of like, okay, we're going to be able to cut rates fairly soon, or even like we don't need to cut rates, the economy's looking stable, because of course a lot of what happened with the Trump tariffs was just massive overreaction. Okay, it wasn't really like, nothing particularly has happened. We've got negotiations coming on. We knew that the first like quarter of Trump's term was going to be volatile. I talked about this many times on stream, of like just the idea that Trump's going to just create havoc for 100 days, and then things are going to stabilize, and then there's the midterm elections that are going to be coming up in November, and things would need to be looking a lot better by then for him to still have some power beyond November after the midterms. So things are stabilizing, and if this is, I mean, we knew that nothing was going to move at least until today, and the fact that we've already seen some strength, and with Bitcoin holding around here, with altcoins looking fairly good, dare I say, things like Render, okay, you've changed market structure, you've broken out of a downtrend, you're holding a higher low after making a higher high. This is the first time that we've really seen like very clear signs of a recovery that could send everything a lot higher. So yeah, I do feel like it was just engineered in order to create liquidity, to cause havoc, to create panic, to basically, for the US government and for those who really need to make the money from this, which is Trump and the government themselves and all of this other stuff, the people with a lot of money already, to bring prices down to the best price that they possibly can, to reset the stock market, to reset the crypto market. Of course, like Bitcoin, it dropped all the way back down to the day of the election, right? So you've retraced the entire move from like Trump was elected back here 6th of November, right? We came down, we tapped into that gap and then got a decent bounce from there. So it was just a whole reset across the board before looking for higher prices. That's what I personally feel. But of course, this could be a bear market coming up. It could be a recession coming up. If it fails here and we're looking at lower prices, then it is a recession. It is a bear market. But I do think that today could be an opportunity for some kind of breakout from where we are, and then we're looking at a new cycle starting, which is why I wanted to go live today, because I think it's an interesting situation right now. So we've got 3 minutes until Powell comes on stage. That's a very hot coffee. Yeah, and we can have a look at some stuff. Cannot don't lie. The state media in the United States did that on purpose. Yeah, like I just said, I think that is very much the case. Yeah. Price action engineered in order to create the most panic and the most opportunity, basically. Decent bounce already from NQ. Very, very similar looking to what happened back here. Look, ETH H4 EMA 200. I would like to think, so this is the 4 hour, we're probably just holding it now, maybe just as support. So if this is the 200, it's probably come under and now we're above. And the 50 is probably just right about where it is, right? Yeah. So we're yeah, decent. The daily. And that's why I'm looking at this move up on Ethereum towards like 2,600. If Bitcoin can rally to new highs, then I think Ethereum to 2,600 looks very, very good. I keep looking at this. I've got this open on my tab. I feel there's an opportunity here. What's happened with Layer? Does anyone know? What has happened with this thing? Why has it puked over the last couple of days? I think just low liquidity, right? It looks like opportunity for me. It's very, very, very interesting. I like it. Fuck this thing. Shield to shit. Portal. All these new tokens. Portal taking out all-time lows. Layer having a big move down. Eigen's one that was looking really interesting to me earlier, taking out internal lows. Maybe get a decent move up here. Tau. I really like how Tau is looking. Yeah, some altcoins are looking all right. Wah. Hot. Also, I got this bloody thing again. I never really use it, but it's late and I want it. I hate it. It's too easy to get like fucking vapes, man. Powell is speaking. Okay. What's he saying? What's he saying? What's he saying? No, he's not alive yet, right? Oh, yeah, he is.
In first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timrose, the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really.
It's really annoying. Every time I click off of the stream, it just freezes on
Janelle
my
Marte
stream.
with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and
We'll
what
look for
does that
short
look
here
like?
on NQ.
Well, let me say, I mean, so let's look back and see where we are. So
Shorty, I'm not
so
trading
go through
this.
2024 up to the
I'm
date.
just,
we've had you know, unemployment in the
yeah,
low
playing
fours
around
for
with
more
ideas.
than a year. We've had inflation coming down in the
Like
now
I say,
in the mid
it's
to low twos.
2:43
We've had an economy
a.m.
growing at 2.5%.
right now
so
for me.
that is the economy as we see
So
it now.
definitely not trading.
What looks likely, given the scope and scale of the tariffs, is that
I
we will
am
see certainly the
asleep.
risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then,
But yeah,
then we
this
will
would be a
see-
short for
we
me
won't see further
on
progress toward our
NQ.
goals. But we might see a delay in that. I think in the
Bitcoin,
you know,
it's
in our thinking, we would
longs
never,
are looking
we
good.
never
I think
do
long
anything but keep
overall is
achieving
looking
those
good.
goals, but we would, at least for the next,
The
let's say,
only
year,
way that I would look
we
to
would-
go
we would not be making
short
progress
is if
toward
we
those
lose
goals. Again,
95.
if
We
that's
trade
the way
below
the tariffs shake out. The
95
thing
and
is,
short
we don't know
that
that.
down
There's so
towards
much
like 82 to
uncertainty about
84.
the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, you know, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got you know, forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
You know, so first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, you know, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. We're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time, so again, difficult
it's just
judgment to make.
repeating the
Not one that we face today, and we
same
may never face it, but you know, we have to be.
Gunstash, hey Luke, you helped me a lot in my trading career back in 2023. Summer when the market was dead. I've been watching your streams daily.
Fox
Hope this
Business.
makes your day. Thank you
So
very
we have
much.
the CPI
I've been
report
streaming
that came out
daily
that showed month over month
for
the first
a long
increase in
time,
inflation
but
in
I
about
hope
3
I will be
years.
back
The
to
jobs report, you said,
streaming again
solid
soon.
that we saw. At the same time, we have those new
More
tariffs that we're living
regularly,
under.
anyway.
So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. You know, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know until we know more about how this is going to settle out and what the economic
Shortening
implications
Q would
are
have been
for
nice.
employment for
Take profit
inflation
right now.
I
You got
couldn't
this.
confidently
It's in the right
say
zone.
that I know what the appropriate path will be.
There you go.
So following on that, just, you know, so
Is
then how does
the,
President Trump calling on you
short
personally
from
as well as the
the
Federal
blue?
Reserve
Take
to
profit,
make rate
yeah.
cuts affect your decision today and affect your
Done.
job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
More clarity.
Well, let me pressure
clarity.
on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And you know, we all look at all these sentiment and read many individual comments just to get a better feel. And you know, businesses and households very broadly are concerned and, you know, postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's you know, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on
Why am
for a long
I
time
staying
to
awake
QE.
for
We,
this?
of course, tapered and everything. And then we immediately went into QT. And, you know, we're down a couple of trillion. But I get you know, we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. You know, it's you know,
Should
we
we
knew
stop
doing this in
watching?
real time that we weren't going to get it perfect.
Or keep
And,
watching?
Those kind of you know, after
What shall
action,
we do?
kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on
Isn't
topics
insomniac
that are
here, yeah.
outside of the mandate,
I mean, it's
such
kind of
as
interesting.
climate change.
At
and,
least the questions this time are a bit
trying
different.
to ensure that certain groups are benefited by your
Look at
economic
this guy.
policies in terms of employment, et cetera.
So,
He looks
okay,
more
on-
tired
on
to me. He's
climate,
like,
You've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that you know we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very,
All right,
very
this is
narrow
dull.
things. We did one thing, one
Go to bed,
guidance
yeah. Yeah.
for the banks, and then
right, let's stop this. Don't need to be sharing that anymore. Okay. Yeah, nothing's really happened, has it? Stayed awake until 3 a.m. And yeah, nothing to discuss. We'll see how this develops overnight. We will see if after all the questions something a little bit more interesting happens. If we were looking just to take a few little scalps here, we would have got a nice short earlier on the NQ. If price comes back down to range lows, there's an opportunity to take a long, but this is just price action, like what you would do to trade in any normal circumstances anyway. Like if any of you are in the crew, you know this is the strategy that we use. It had 7 wins earlier on during the open. We're looking at the same kind of thing now. Again, here you could short this right now. Bitcoin, looking at the 4-hour time frame, you got a 4-hour breaker, you got a 4-hour gap. We've dipped into it. You want to see it hold. If we can get continuation, then I think 102 is looking likely. 102 is essentially the only imbalance that we have before all-time highs. So we have this. All right, we're just looking at a move back into this. If that does not play out, or if it trades through that, then it's new all-time highs, and we're looking at 120, 130, 180. Okay, and we're just looking at price discovery once again. So, yeah, like I want to see the market continue to push up a little bit higher because of the structure that we've got here. I think a lot of people are looking to get into long positions and are sidelined right now. I think a lot of people are trying to short this. I think open interest being down, CVD being down, points towards a very uninterested market and a very sidelined market. And if this can just continue, like I say, I'm long. I have been since all the panic that's been from back here, and I kind of just want to see it push a little bit higher than this now at this stage. It's all very, very, very boring. Altcoins look like they've got some life in them. I'm looking at the likes of Tau and looking at the likes of Render. Ethereum is showing some really interesting stuff, but it's can it get something here? If this is to move higher, it's so early. We'd be looking at a good 4, 6, 8 months of upside again. And we're like 2 weeks since we had the first sign of strength that we've had since this whole downtrend that broke out of this downtrend and then came back into here. So yeah, I think overall the market is like it's okay. We can be maybe looking for a little bit higher, but well, let's see how it goes. Someone just subscribed. Connor SOF. Connor's OF. OF. We have an OnlyFans guy. OF. Thank you for subscribing. Yeah. Oh my God, I'm so tired. I don't even know what I'm saying. 3 a.m. Why am I in Asia? Any questions? Anything people want me to have a look at? I feel like I need to do a little bit more because I've stayed up and I've just had a coffee. So I feel like I need to talk a little bit more before I go back to bed again. So yeah, let's discuss. If anyone has any questions. For those of you who are here, I might do the same thing as I did last stream, because I'm traveling now and I'm not as active as I was. Like I'm still pretty active. I'm still like updating as much as I can be, but we've got a pretty dead market. There's not a lot to be talking about, and I'm busy doing other stuff, life stuff. But if anyone is interested in joining the crew, we've been doing this really well on the NQ. Like I say, we took seven trades, 7 wins earlier on during the New York Open. We've got a really, really solid chop trading strategy that I came up with for trading the NQ. Most of my trading at the moment is scalp trading on the NASDAQ, so it's not the kind of thing that I can be going live and looking at setups and looking at that kind of thing. It's just like, where is price action right now? Where is it going to be in 1 to 4 minutes time? It really is just in, out, in, out, in, out kind of trades. So if anyone's interested in learning how to do that, I'm very open to doing another one of those, like, DM me if you want to join the crew. Then do that. We've got some good offers as well. So if anyone hasn't traded futures before, or if anyone does trade futures, if you're trading on Top Step or anything like that, I've started using another prop firm called Top One, which has very, very similar rules to Top Step. They're really good. We've got 55% discount with them at the moment. You can get instant funding, so no challenge necessary, anytime payouts. It's really, really good. Again, it's all in the Discord. So take a look at that. I can't do any promoting on here because, like I say, I've not been streaming very often lately. So when I get back to doing that, then I'll start talking more about other things. But yeah, if anyone has any questions, please do let me know in the chat. I can answer anything that anyone wants to know. If anyone wants me to look at any charts, if anyone wants me to ask me any general stuff. But if not, then yeah, then I guess I'll just go to bed. I hope someone asks something. Luna Classic, really? LUNC USDT.P. I like, right? Okay, yeah. I see what you're saying. So it's putting a low back in February, and then when this had like this big capitulation that was back here, actually it's quite cool. And he's taken internal lows. Have you? No. Not on that chart. Is there one? Does it have Blofin? You haven't taken out those lows. But it did do it back here. Did Spot? None of the perps did. Neither did Spot. Basically, what I thought we were seeing was that low there going, which is similar to what's happened on Tau, was it? One of them, right? And then if it had done that and got a decent bounce, then that's kind of nice. It hasn't done that. But I like that it never took out this wick from back here. It's Luna Classic, man. I don't know. The structure's looking really similar to other altcoins. What could you do? Inverse head and shoulders. Hey, if the market ends up turning around, this is going to do very well. And it's one of those that's got plenty of upside potential. It's been showing some resilience lately against other assets at the very least. And if you're looking for a long, the target's basically somewhere up here, right? So you got a pretty clear invalidation. You've already failed to break lower. You're consolidating. You're holding pretty nicely. So you can use an invalidation around here. You'd be looking at the very least to a move up towards like 0.0000, however many noughts, 1. Which is a 6R, and I think the probabilities are fairly decent on that. Like, we're looking 50-50 across the whole market, basically, still right now. So if you can get a 6R trade on a 50-50 trade, it makes sense to take it. Just not too much exposure on too much stuff. And then if you're going to get a move up here, then it's likely that you're going to get continuation anyway. So, yeah, something like Luna Classic looks good. Hype is one that I am long on. So, Hype, very nice. I'm actually in this trade, so I never got stopped on that. So I've been buying Hype since 15. of course, we had this whole like bullshit that was going on. You'd want to be taking profit on hype because it's a similar situation to where the target would be on something like Lunar Classic, where you had a decent break higher. You showed some strength, but then you've swept some highs, consolidation. I'm bullish on the protocol, the project, and everything everything that's surrounding hype anyway. So I think that we're looking at a move towards $50 regardless. But if you're in a long position, it would certainly be a chance in which to take profit. Like I say, the market, if the whole market turns around, then this is going to be one of those assets that performs really well. If we are to get a dump, right, if this does dump, if Bitcoin goes down to 82, 84, then you'd be wanting to bid in here somewhere. Right, because you just had like, oh, another subscriber, thank you very much. Marlon Vargas, thank you very much for subscribing. Yeah, you change market structure. 1, 2, 3, 4, 5. You want to come down and take out some lows. You'd have the golden pocket down here. You'd be doing all of that kind of stuff. So there would be some confluence if this was to move back down to around about $14. But I feel the market's going to push higher. In which case, if you're in a long position, you should be taking profit. But this should get continuation, right? What do you think about virtuals? Virtual. Hey, I'm also long on virtuals. So I am long on this. I'm going to show you my positions. This has been since a few weeks as well. So virtual, I do have a position open. So I am long since 0.87. So down here, right? Decent pullback. Have taken profit again. 4 hour. You would have thought this would bounce if this was going to get continuation higher than here, but maybe this is just shaking out some longs. You've come and tested this wick. That wick swept that low, so that imbalance has been dealt with. That candle swept that low. Yeah, I hope this goes higher. Are there EMAs here? Nope. Daily. You got a real fresh daily 50 EMA. SMA. EMA, SMA? What is it? This is an SMA. What is the EMA? Let's see. Once again, if we get some bullish sentiment, if the market starts pushing higher again, let's just see where it goes, because this will go into price discovery. Virtual is one of those where it's such a big, like, huge AI hype that will inevitably happen if crypto starts to look a little bit better across the board again. So virtual is going to be one of the leaders for that, because everyone's going to be setting up AI agents all across the board, and virtual is the leader for that. But yeah, it's been a decent pump. It wasn't particularly technical. All right, there's nothing really that technical going on within the market right now, in my opinion. It's just a case of just position yourself into stuff that's looking half decent. If you get a good result, then you're taking profit on it. If you don't, then you're just cutting losses fairly quickly. And for me, I'm just letting winners run when it's like for longs, because I do feel that we're maybe heading into something that could resemble another leg of this bull run. So yeah, let's see how it goes. But again, virtual is one of those that I have the position. Yeah, we'll see if it can go higher. Shorty, do you mark a range on NQ at any time of the day, or is it relevant to a session timing or any high volume time? So you can mark it at any time of the day. So recently we've been having these like long ranges. I mean, this is the thing. You're range bound almost all of the time, right? If you were to slice the pie, right? You're basically looking at something like this. Okay, so this is most markets. It will be 70% of the time you're in a range, right? 28% of the time or whatever, you're trending, and then 2% of the time is an impulse. And we know when the impulses are going to happen. It's going to happen around data releases. It's going to happen around the likes of FOMC. It's going to happen around CPI, or it's going to happen around its Trump tweet or something like that. So whenever you're in a ranging market and you're just chopping around and doing nothing, and there's no real context there, then you can just trade it as that. And that's why I've developed the strategy that is what we trade within the crew, and what we trade on the initial balance around the New York Open is just identify a range of the forms and just trade that range. It's just the amount of times that you can just get trades in, out, in, out, in, out all the time is really, really simple. So if you look at where a range formed earlier on again, okay, you can just mark off like any time of day. You get your longs, you get your shorts, and even if you start to form a trend out of that, you're still going to have an opportunity to take profit before you get a move that starts to form a trend. So it's a similar situation here. I'd say this is like what we're looking at now is too wide to be considered a range. You had the opportunity to take a short. It never came back to range lows. So you're probably looking at some kind of trending move starting to come out of this. When you're looking at a trend, then you're looking at the golden pocket and the moving averages. Okay, so what we're looking at here is the 1 minute. Yeah, I would have thought that we'd be seeing a moving average around here that's offering support, and now we're looking at the same thing again. And then you're looking at the 618 as support, right? Okay, and then you're getting this. And so on. So right now you're looking at moving averages and the 618 giving some support for higher prices. But regardless of that, even if you were to trade a range and you're marking this off as a range like we did here, okay, the joy of trading a range is that you're taking profit at the 50% before it gets to the 618, which would be where you're looking at a trending move, and therefore you're winning the trade anyway. So whether you're in a range or whether you're in a trade, you're still making money from the range. So yeah, you can mark off a range any time of day. The markets are always ranging. It's the thing that most people cannot trade. So most people's weakness is range trading. And this is the kind of thing that we talk about during the trading rooms and everything. And questions I get is like, okay, how do you look for confirmation? Or what if you break up from here? But this is why you have a real good set of risk. So this is why we set our risk at $300, 100 ticks. Or yeah, like, I don't know. What am I saying? Yeah, you can identify it anytime. And it works out really well. And for any of you who are in the crew, once again, we've had like I say, it was seven wins in a row this week. Last week, I think we had 6 wins, 1 loss. The week before, we had a good amount of wins. I think we started with a loss before that, and then made a load, then 1 load. But yeah, a couple of people in the crew, they made like, it was like $800, $1,000 today. It's just trading chop, which is how most people get chopped up. I'm not making any sense at all right now. I cannot talk. I'm so sleepy. Maybe I should upload the trading room so people can see instead. But then I don't want to give away the alpha. I only want this for the crew. Ragdogs Emmy, Luxan, your Tesla trade is still holding well. How's Tesla doing? What was my Tesla trade? I remember there was a log from down here. No, this one. $110. Close out. Was this, or was I talking about some gap fill or something? I don't know. I should say trade idea. Because I don't think I've taken a new position on Tesla recently. I had this long from 110 or whatever it was. No, yeah, long from 110. That one. Or bought it at 110. I do not remember. This was so uneventful. Again, of course it's uneventful. It always is uneventful. FOMC, CPI, PPI, it's always super uneventful, but everyone's watching it and... Yes, I did. That retest of 150 and just hold it as the only stock that didn't appreciate during the AI bubble. Ah. Yeah. Nice. Shorty. I'll try and trade this top one account alone, then see where I land and join the crew. Cool. Yeah, if anyone wants to join the crew, once again, I'm very happy to... still be offering the same kind of thing that I've offered previously on streams of like $99 for the whole year. It's not something I would ever usually do, but I'm very, very aware myself personally that there are days where I'm not around because I'm traveling and the market's kind of dull at the moment. So it's not like it's like full on every single day. And I just want people in the crew just hanging out, chilling out, enjoying themselves. So I just like to have activity there because it motivates me. So if anyone's interested in joining it, it just helps to cover the costs of the domain and keeping Zoom up and running and all those kind of things, because I'll lose a shitload of money every fucking month from running this, from doing this stuff anyway. It costs me so much money. So, yeah. Yeah, if anyone wants to join, you at least help to stop me hemorrhaging money on running a community. Which might help to motivate me to do some more live streams and stuff. It's so fucking expensive, man. It's like just to be able to run Zoom sessions and like have Discord on Nitro to be able to do voice channel chats and to have a website and all the email addresses associated with it and all that kind of thing. Don't make any money, man. All these myths about running a group and you make a shitload of money. No. No. Maybe if I had thousands of people in it, it'd be good, but we don't. So, yay. What's this? President Xi Jinping said Taiwan's renew whatever with China is inevitable and unstoppable. So China-Taiwan looks like escalating again soon. That's interesting timing. Polius, no alt season in Q2. Eh. No alt season ever. Ever again. And we'll see. If there's going to be an alt season, it has to happen now, right? Now's the time that the market needs to fucking wake up. Otherwise, it's never going to do it. So, if we're going to get an alt season, it's going to be an alt season in Q2. Has to be. If we don't get an alt season in Q2, we're wrecked. Well, maybe not, but like the alt season can come Q3, right? We can just get the whole like gradual rise of all markets again Q2 and then alt season Q3 or whatever. I don't know. I do not know. Right, I'm going to wrap it up here. I'm so tired, man. It's 3:22 a.m. Thank you very much for watching. I am going to do my best to do a lot more of these live streams. But yeah, man. I'm tired. So I'm going to wrap it up. So thank you guys. And I'll see you again very soon. Bye-bye.